Good afternoon. Today I am going to start ratio analysis, classification of ratio analysis. First, discuss the liquidity ratio. What do you mean by liquidity ratio? Liquidity ratio means the ability to pay the firm its current liabilities in proper time. That means others name short term solvency ratio. Short term solvency ratio used to assess the short term financial position of the firm. Therefore, this ratio may be called short term ratio. Now, short term ratio or solvency ratio may be divided into two: current ratio and liquid ratio, or another names acid test ratio or liquid ratio. Now discuss first current ratio. What is the current ratio? Now current ratio is the relationship between current assets and current liabilities. Now how to calculate current ratio? Current assets by current liabilities. Current assets by current liabilities. Now what are the current assets? Current assets are those assets which are converted cash within a very short period, that is known as current asset. Say for example, current investment, cash in hand, cash at bank, bills receivable or trade receivable, short term loans and advance, and other current assets also. Similarly, current liabilities are those liabilities which are payment to outside within very short period, that is 12 months, for the sale of date of balance sheets or within a period of operating cycle. The are example for short term borrowings, that is the bills payable, sundry creditors, bank overdraft also, short term provisions and other current liabilities. This ratio, their ideal ratio is 2:1. That is the standard ratio or ideal ratio in this case 2:1. That means current assets 2 and current liabilities equal to 1, or current assets 2 lakh and current liabilities equal to 1 lakh. This is the ideal. Now what are the objectives of this current ratio? Their main objectives of current ratio are used to assess the firm's ability to meet its short term liabilities on proper time. Current ratio indicate 2:1 is supposed to be an ideal ratio. It means that the current assets of a business should at least be twice of its current liabilities. This is ideal. If the current ratio is less than 2:1, it indicates the lack of ability or shortage of working capital. But a much higher ratio always welcome that organization. That means the higher ratio that indicate 2:1 may indicate a proper investment policies of the management. Okay. Now next, quick ratio or acid test ratio or liquid ratio. How to calculate? That means it is the relationship between quick assets and current liabilities. Quick assets and current liabilities. Quick assets or liquid assets means are those assets which are converted into cash or cash equivalently very shortly. That means current assets, or you apply the formula, that is equal to CA minus inventory minus prepaid expenses by current liabilities. But the ideal ratio 1:1. 1:1. This is the ideal ratio. That means liquid assets ₹1 and liquid current liabilities ₹1. Now what are the objectives? That means the idea is that for every rupee of current liabilities, there should at least 1 rupees of liquid asset. This ratio is better to test of short term financial position of the company than current ratio. It is considered only those assets which can be easily or readily converted into cash. Okay, the quick ratio thus a more liquid ratio than the current ratio. Okay, now one example how to calculate current ratio and liquid ratio. Now one question, how to calculate current ratio and liquid ratio. There are different types of questions in the liquid ratio. Find out their CACL or working capital or ratio are given, whether it is increase, decrease or no change. Now there are different types of questions come in your exam purpose. Now first questions, question number 1, from the following data calculate current ratio and liquid ratio or quick ratio. Now informations say liquid assets rupees 75,000, inventories, that means stock, inventories 35,000, prepaid expenses rupees 10,000. Working capital, you know working capital means current assets minus current liabilities, say 60,000. These are the questions, CBSE sample paper. (2019). Now these are the questions. Now how to calculate? First, current assets, that is the solutions. A current ratio, you apply the formula, current ratio equal to CA by CL, but here current assets mean these are the assets, that the liquid assets, short form LA, plus inventories I and B, plus prepaid expenses by current liabilities. But here current liabilities are not given, but working capitals are given. That means we know working capital equal to CA minus CL. Then you apply the current liabilities. Now here total this amount equal to 75,000 plus inventories 35,000 plus 10,000 by CL. But CL you will find out, CL equal to CA minus working capital. CA minus working capital. Now this is equal to adding 75,000 plus inventories 35,000, that is equal to 1,05,000 plus 10 1,15,000. This is equal to total amount current assets equal to, this is the 0 0 0 5 5 0 1 1 3 4 5, that is a 45 7 3 10 11 12 1,20,000 by, this is the current assets 1,20,000 minus 60,000, this is equal to working capital 1,20,000 minus working capital equal to 60,000, this is equal to 1,20,000 by 60,000, that is equal to 2:1 ideal ratio. This is the answer for current ratio. Okay. Now next you calculate point number 2, liquid ratio. Liquid ratio formula, that is equal to liquid assets by current liabilities, but here liquid assets equal to CA minus prepaid expenses minus inventories by CL. Okay. Now CA equal to 1,20,000, prepaid expenses 10,000 minus inventories 35,000 by CL already find out 60,000. Therefore liquid assets equal to 1,20,000 minus 45,000 by 60,000. This is equal to 5 balance 1 5 7 75,000 by 60,000, that is equal short form 75 by 60, or you divide it 15 5 4, that is equal to 1.25:1. This is the answer. Okay. Understand everybody? Now this is the one type of questions. Next, another types of questions. Calculate CACL. Say, let us one another question. Question number 2, current ratio of a company current ratio of a company 3:1 and acid test ratio acid test ratio 1.75 1.75:1. Calculate the value of current assets, liquid assets and inventories. Okay, 2 marks or 3 marks. Now again repeat the question. If a company, their current ratio 3:1, but their current liabilities are given, current liabilities is rupees 3,50,000. Now you just calculate the current assets, liquid assets and inventories. Now you apply the mathematical formula CA by CL. Solutions. Current ratio, short form CR. CR given, that means CA by CL. This is equal to 3:1, that means 3/1. Just cross multiply, or we can say CA equal to 3CL. Let the equation number 1. Now current liabilities are given 3,50,000, or CA equal to 3 into CL, 3,50,000. Automatically you find out the current assets 0, 15, 1, 10, 10,50,000. This is the one answer, that is the current assets. Now then another ratio, liquid ratio are given. Liquid ratio, short form LR, that is the CA minus inventory by CL. But in this ratio are given 1.75/1. Okay, or LR equal to, cross multiply, that is equal to CA minus inventory by CL, or CA minus inventory equal to 1.75 CL. This also there another equation. Say let the equation number 2. You find out the value, automatically two figures are given. CA also you are known, current liabilities also known, then you find out the inventory easily. Or inventory equal to inventory equal to CA minus 1.75 into CL. Now put the value. CA already given 10,50,000, minus 1.75 CL all given in the questions 3 lakh 50,000, that is equal to 10 lakh 50,000 minus your multiply. What is the amount of multiply? 1.75 into 3 lakh 50,000, that is equal to 6 lakh 12,500. 6 lakh 12,500. Therefore, inventory equal to 10 lakh 50,000 minus 6 lakh 12,500, that is equal to 005 500 that is equal to 7 3 and 4 lakh 37,500, that is equal to inventory. Now second answer, first answer CA, second answer inventory, and then liquid assets. You are already known the formula, liquid assets equal to current assets minus inventory. Current assets minus inventory, that is equal to liquid asset. But here liquid assets equal to, here liquid assets equal to CA minus inventory. CA equal to 10 lakh 50,000 and inventories are given, that is equal to 4 lakh 37,500. This is equal to same amount 6 lakh 12,500. This is the answers. Okay, everybody understands? Find the value of CA, inventories and liquid assets. Okay.